Hello everyone, and welcome back to Bitcoin Legacy. In today's video, we're breaking down an important market discussion that's been gaining attention across Wall Street and the crypto space. Why is gold soaring to record levels, while Bitcoin continues to struggle, despite facing many of the same macroeconomic conditions? Speaking recently on CNBC, BitMine CEO and well-known market strategist Tom Lee shared his insights on this unusual divergence between precious metals and cryptocurrencies. Gold and silver are rallying strongly. The US dollar is weakening. Global uncertainty is rising. Yet Bitcoin, often promoted as digital gold, has failed to keep up. In this video, we'll cover why gold is outperforming Bitcoin, how dollar weakness is driving metals higher, why crypto momentum has stalled since late 2025, and most importantly, why history suggests investor money may eventually rotate back into Bitcoin. Let's start with what's driving gold's massive rally. Tom Lee. On gold's surprising rally. During his CNBC interview, Tom Lee described the recent surge in gold and silver prices as one of the most surprising trades of the year. According to Lee, several forces are coming together at the same time, creating a powerful momentum trade in precious metals. First, there's strong global demand. Gold has long been viewed as a safe haven asset during times of uncertainty, and today's world is filled with uncertainty: economic, political, and geopolitical. Second, there's momentum-driven buying. As prices rise, institutional investors, hedge funds, and even retail traders often chase performance. That inflow of capital pushes prices even higher, creating a self-reinforcing cycle. Tom Lee noted that gold's rally is not just driven by fear, it's also being supported by real demand, especially from outside the United States. In some regions, demand has become so strong that certain silver ETFs are trading at unusually high premiums, signaling tight supply and aggressive buying. Lee described the move as, in his words, really eye-popping. But he also cautioned that part of the move may simply be price momentum feeding on itself, rather than fundamentals alone. Still, momentum matters in markets, and right now, precious metals have plenty of it. Weak US dollar and Fed policy. Another major factor behind gold's strength is the weakening US dollar. Tom Lee explained that as global growth improves, the dominance of the US dollar naturally comes under pressure. At the same time, the Federal Reserve remains cautious about cutting interest rates too aggressively. This combination, moderate growth and a cautious Fed, has kept the dollar from regaining strength. Historically, when the US dollar weakens, hard assets like gold and silver tend to perform well. That's because commodities are priced in dollars. When the dollar falls, it takes more dollars to buy the same amount of gold, pushing prices higher. Gold also benefits from its role as a hedge against currency debasement, inflation risk, central bank policy uncertainty. Lee emphasized that these exact conditions are present today. And unlike stocks or crypto, gold doesn't rely on earnings growth, adoption metrics, or network activity. It simply responds to macro pressure and investor psychology. This is why, even with improving risk sentiment in some markets, gold continues to attract capital. Why Bitcoin is not keeping up? Naturally, the big question becomes, if gold is thriving under these conditions, why isn't Bitcoin doing the same? Tom Lee addressed this directly, and his answer may surprise some crypto investors. According to Lee, Bitcoin has been a major disappointment relative to expectations. In theory, Bitcoin should benefit from the same forces driving gold higher: currency debasement, geopolitical risk, central banks easing, loss of trust in fiat systems. Yet in reality, Bitcoin has failed to respond. Lee believes the main reason lies in market psychology and recent history. Bitcoin, he said, is still suffering from the aftermath of the October 2025 crash. That event severely damaged investor confidence. Each time crypto prices attempted to recover, new negative shocks hit the market, forcing traders to reduce risk again and again. As a result, Bitcoin has remained stuck in a cycle of short-lived rallies, rapid sell-offs, low conviction buying. This pattern has prevented any sustained upward momentum. Gold, on the other hand, never experienced the same type of sharp confidence shock. Crypto versus gold, haven assets in practice. Tom Lee also made an important distinction between theory and reality. In theory, Bitcoin is often described as digital gold, but in practice, markets don't always treat it that way, especially in the short term. Gold has thousands of years of trust, central bank adoption, low volatility relative to crypto, deep liquidity across global markets. Bitcoin, while innovative, is still seen as a risk asset by many institutions. During periods of stress, large investors often sell Bitcoin first and move into assets with longer track records. This doesn't mean Bitcoin has failed as an idea, it simply means adoption cycles take time. Lee emphasized that Bitcoin's long-term thesis may still be intact, but short-term performance depends heavily on sentiment and positioning. Right now, sentiment remains cautious. Investor rotation. Gold first, Bitcoin next. One of the most interesting parts of Tom Lee's analysis comes when he looks at market history. Historically, there has often been a rotation of capital between gold and Bitcoin. In both 2017 and 2021, gold rallied first. Once gold prices peaked and began to lose momentum, investor capital flowed aggressively into Bitcoin. The results were dramatic. In 2017, Bitcoin surged nearly 1,000%. In 2021, Bitcoin gained roughly 400%. According to Lee, this pattern reflects investor behavior. Gold acts as the first safe haven. Bitcoin becomes the second stage risk-on trade once confidence improves. Recently, gold prices appear to have reached a potential top. After climbing near $5,600, prices pulled back to around $4,892, representing a decline of roughly 13%. Such pullbacks often signal that a rally is cooling, not collapsing. And historically, when gold momentum slows, speculative capital looks for the next opportunity. To summarize, gold is soaring due to dollar weakness, global demand, and strong momentum. Bitcoin is struggling due to confidence damage and repeated market shocks. But history shows that when gold rallies first, Bitcoin often follows later, sometimes explosively. As always, markets move in cycles, and according to Tom Lee, the current divergence between gold and Bitcoin may not be permanent. It may simply be the calm before the next crypto rotation. If you found this breakdown useful, don't forget to like, subscribe, and turn on notifications for more market insights right here on Bitcoin Legacy. Thanks for watching, and I'll see you in the next video.